The crypto market is still cooking right now. We are still hovering around $2.5 trillion. And while we are waiting for the next big move here, we do have a very big day ahead of us because, yes, we do have FOMC day. Now, I have been talking about this. I have been addressing it as well. It's definitely going to be an important one to listen into. Not for the actual rate cut decision, because I don't think that we're going to get a rate cut. I think that we get a pause, but I do believe that the Fed is going to give us some information regarding the overall economic outlook for the remainder of this year and beyond. Now, with what the Fed does say, and what we hear from Jerome Powell, yes, it will affect the markets just like every other FOMC meeting. So, we definitely have to stay tuned to that. Obviously, I know that there's going to be a lot of, FOMC experts in this space telling us exactly what's going to happen. But ultimately, the focus here is a pause on rate cuts because, again, the environment is not telling us what to do. So we're going to see a pause just like we did back in January, and ultimately the markets are going to price that in. So there's not going to be a big effect from that. But what Jerome Powell does say, that's where we start to see the market react. Right now, the market is right around $2.5 trillion. Typically, when we have a pump into FOMC day, we start to see a rejection from resistance, which we'll talk about in this video as well. But looking at the total crypto market cap, this is what we are seeing right now. The key focus here is like $2.63 trillion. We need a daily candle close over that. And even then, I still want to see a big push above, like 2.65. After that's closed over, the next key area here is up around roughly like 2.86 trillion. It's a little bit higher, but, this is all where we will start to see some issues on the chart arise. So I want to see a big push over like we'll just say 2.9 trillion, just to be safe. And then after that's really kind of closed over and we start to see another big push, ultimately we look at the prior high caps up here and, that's around like 3.19 trillion to like 3.3 trillion. And by that point, we should be cooking pretty well. But main thing that I'm looking at, main thing that I'm watching for is just bearish divergence. I've been talking about it in the Discord group as well. Ultimately, what we don't want to see is we don't want to see the price action continue to the high range, and then we start to see, RSI, doing something similar, but then you look at the lower time frame structure, and it's a completely different story because this is what you want to see, right? You want to see RSI creating a new high along with the new high on the chart, but then you go to like a lower time frame structure like the 12-hour and you start to see bearish divergence where the RSI is, having a lower high while we're seeing a higher high on price action. This is what's known as bearish divergence. So although price action looks good, momentum is not there to, keep the price action going, which is why we start to stall out, we start to see weakness, and then we start to see that collapse in price action. So that's what I'm actually watching for right now on some of these lower time frame structures, like for an example on like the 4-hour or even on like the 2-hour. And I know that a lot of people say who cares about these lower time frame structures? But if we think about this logically, right, we have a nice jump here on price action on the 2-hour. We hit it here. RSI and bearish divergence, we start to see the sell-off and then we just chop. Now, obviously, it's way too early to call that just now. But I will be watching this, throughout the day, today, because with FOMC day here, yeah, we could definitely start to see a pretty big reaction on the chart, which could tell us pretty much what's going to happen next. Now, in my opinion, what's going to happen next here is we potentially have another big move to the upside here. Now, this is where we start to see a reaction on, the crypto market cap. This is where we start to see a reaction on Bitcoin, on XRP, etc., where we potentially have a retest of the prior resistance down at like 2.43 trillion, and then we get that continuation to the upside. That's what we should expect. That would be healthy price action. But again, we take it one step at a time. We also watch for RSI to near that overbought territory, because typically every single time that we got to this overbought territory, we do see a pretty significant sell-off on the chart. As you guys can see, even going as far back as October, even going all the way back to like July, we start to see that sell-off just to kind of cool things off. So I'm expecting a pullback here soon. But overall, today's definitely going to be a very, very interesting time for the market. Probably going to see some significant volatility. There is a 99.2% chance that the Fed will not cut rates at this week's March 18th meeting. I agree. I don't think that we see a rate cut. We most likely see a pause. We are about 14 hours out from this. By the time that this video does go live, it will most likely be an exact 14 hours out. And if we're thinking about that, obviously, yeah. We most likely start to see the Fed kind of go on the defense here, pausing rates, trying to see what happens with this entire situation over in Iran. And then by April 29th, we could technically start to look into potential rate cuts if oil is starting to stabilize and if the situation is not escalating with Iran. So that's what I'm watching for right now, is just kind of going through March with pretty much no rate cut. April is when we start to look into the potential outlook of having a rate cut decision or not. If we do have the Fed ease while we have a war breaking out, that would be huge for risk on assets, because it means that we're going to start to see, number one, interest rates getting lowered, which means that we're going to print more money to, kind of accommodate for that. It just opens the door for more economic stimulation, which, we know that this market loves, and it would also make sense with, midterms coming up and things like that. It would just be better for the polls. So, kind of give the people what they want, which is, print more money, prop the markets up, everyone's happy, and then also give out, maybe some stimulus checks, which, we know that they were already being talked about with, with tariffs. So, you print that money, you give out some, stimulus checks, everyone's happy. They don't really care about the economic, consequences, and everyone's pretty good. That will basically send these markets soaring. That's what would be the best outcome. It's question one if that's going to be the case or not, but we do know that Trump has been urging Jerome Powell to lower interest rates immediately. He's been talking about this for quite some time now, ultimately saying hey, we need to cut interest rates now. And I think that, this is a reaction to what's been happening. I mean, obviously, I feel like this admin is aware that, most people are now unhappy with how the markets have been looking. And I'm not talking about crypto. I'm talking about traditional markets. And the best way to prop them up is by lowering interest rates, which cause risk on assets and assets in general to skyrocket. And then you have that door opening up to, stimulate the economy. I mean, that's exactly what we are probably going to witness over the next couple months if we see interest rate cuts resume in April. It's not going to happen in March. But looking at this, we also have a video clip of, the president. We have just-in Fed rate cut pressure just hit a boiling point. President Trump is now openly calling for an emergency-style Fed move, saying rates should be cut right now, and even suggesting a special meeting. Trump, what's a better time to cut interest rates than now? A third-grade student would know that. Unclear if a special meeting will occur, but there is a scheduled Fed meeting tomorrow, March 17th, with the rate decision and POW press conference expected to take place March 18th. If the Fed holds steady again, expect markets to focus even harder on the tone, the dots, and whether any path to cuts gets signaled. And yes, this is actually very important. I love that Crypto's RS actually added this because although, we don't get a rate cut decision, the market is going to listen closely to what Jerome Powell is saying. So, if we start to hear, the potential, we don't know if we're going to be able to cut interest rates in April or so, markets are not going to like that right now. I would argue that the Fed is dealing with uncertainty. They don't know, like Jerome Powell doesn't know what's going to happen this week, next month. All we know is that we are at war. There's a war breaking out and, oil is still questionable. Although yes, oil has been stabilizing, it's still questionable on what's going to happen next here. So that's why this is kind of getting, held up. Trump can say that, oh, well, even a third grader student, could, cut interest rates. They would know that it's the best time to cut interest rates, but that's just not true. Like, you got to think about this logically. Like, one major headline, one major move from Iran, could immediately cause oil surging or cause oil to surge again, while it's already surging right now, which means, inflation is going to cook again. So, this is not an easy decision for the Fed at all. But check this out. Jerome, too late, Powell. I call him too late because he's always too late with interest. Should cut interest rates. He should cut them right now. They should have a special meeting. What's a better time to cut interest rates than now? A third-grade student would know that. So, yeah. We don't know if this is going to happen. Obviously, like, April would be the focus because, if we start to see this war de-escalate and things kind of cool off, for, like, a whole month, I think that kind of gives the signal to go ahead and cut interest rates, but it's questionable with, inflation. We do get a lot more economic data next month. So far, a lot of the inflation numbers that have been coming out, it doesn't price in oil being well over $90+ a barrel. But we have here key economic events this week. This week's Federal Reserve meeting arrives at a critical moment as U.S.-Iran tensions drive oil prices to $103 per barrel. Again, oil has started to kind of cool off. We're at around roughly $94 per barrel. I would love for this to kind of just drop significantly more. We need to see, a price move below $82, almost $83 per barrel. We need to close below that on the daily. That will be the big signal. But looking at this, labor markets, they're cooling. Negative 92,000 jobs and 2026 rate cuts looking unlikely. June probability 23% chance. Powell's press conference and the dot plot are under intense scrutiny. Key events, obviously Tuesday's passed. We're now looking at Wednesday. We do have the February PPI inflation shows initial energy shock impact. Again, the February inflation report does not matter. We're not going to really see a significant push here at all because most of the push on oil started in the beginning of March. So again, we have to wait until next month to see these reports on just how bad inflation is now with, again, oil being well over $90+ a barrel. Now on top of that, Thursday, we do have the Philly Fed Manufacturing Early March Industrial Health Check. Then, we have Thursday, January, new home sales baseline for housing demand pre-conflict. So markets will be closely monitoring these events amid geopolitical turbulence, but I think that they're going to be listening to Jerome Powell a little bit more closely than pretty much anything else happening with these major events. Now, we do know stocks are still kind of, cooking a bit. Nothing too crazy. Ultimately, what we want to see out of stocks is something very similar to going back to October where we did have a sell-off, and then we kind of just, consolidated a little bit, and then we got that expansion to the upside. Right now, we are still looking as though stocks are kind of weak. Today, we will see stocks in terms of RSI try to retest the moving average. So far, we have been getting hammered every single time that we do try to retest this moving average, as you guys can see here on the chart. So this is where we start to see, a potential move on stocks where, either stocks are strong or they're weak. So again, just today, in general, is going to be a pretty volatile day. Looking at the overall market, though, so fear and greed is back into the mid-neutral territory or the lower neutral territory, right? About roughly 44. Yesterday, we were at about 43, so not a big change. But just looking at Bitcoin, Bitcoin has been cooking. We've been talking about it. We got a major expansion on the chart. A lot of people were saying, like, Oh, Nick, like the chart didn't explode. I mean, ultimately speaking, Bitcoin went up over 15+%. That's a $10,000 plus move on Bitcoin. So yeah, this is a very incredible move, and ultimately, from the beginning of the month, we're up over almost 17% on Bitcoin, $11,000. My index that I'm invested in with Bitcoin. That dividend is going to be paying out pretty significant. So I would argue that yes, this is an expend upside. It's a nice explosion. We love to see it. But we are at the first key area here, which is like I said, if we go back to the total, if we do have a potential sell-off from that higher up level, then yes, Bitcoin would most likely retest the higher area here around almost 80K. Then we would get that significant rejection back down to like 69K to like 72K. That's what I would be looking at. And then we would get that continuation up to the next key level here around like $85,000. So again, Bitcoin still looking pretty good. Watch for RSI though. I'm just going to say it right now. Very similar to what I was saying with the total. Yes, we need to watch for bearish momentum here to build ultimately bearish divergence, right? Because if we're looking at this like on the 4 hours so far, okay, RSI is already in the overbought territory. The last time that we were in this overbought territory was back in the beginning of March before we had that massive drop back down like 65K. We could still see continuation here. RSI is already in a downtrend. So we need to just watch this closely over, the next 24 hours. If we're looking at the 24-hour view again, we're getting close to the last prior area. Like this is where we started to see a major sell-off on Bitcoin initially. Like we're at $92,000, or 90. We're actually at 98K here. Initially, we're at like 92, 94K. But this is where we started to see a problem. So that's why we need to watch this closely as Bitcoin is inching its way closer into that overbought territory. So just be very cautious here with XRP. Again, it's very similar. We have a very similar setup here to Bitcoin. It's a little bit different. However, it's very, very similar. And ultimately, the big thing here is again very similar to Bitcoin. We want to watch for bearish divergence to form on this chart, especially on like those lower time frame structures, which so far we're kind of seeing that. So we need to see RSI really push higher here, but ultimately my focus here is on the 24-hour view, because very similar back to, January, where, XRP was at 241s. We're getting closer to that overbought territory, which tells me, we're probably going to see the market cool off a bit. Very similar to Bitcoin. Yeah, I mean, XRP has had a great move here, up almost 20%. And a lot of people say like, oh, this doesn't matter, guys. If you have $10,000 invested, 20% move is $2,000. Yeah, that's a very good move. You're not let's go back to stocks real quick because I want to show you guys something. If we're thinking about this going all the way back to November, okay, the stock market was up 7.31%. Just for reference, a 20% move would be going all the way back here to May of 2025. So a 20% move in what we're talking about less than a week if we're thinking, or actually it's a little bit over a week. It's 10 days. It's actually 9 days technically, so it's a week and 2 days, 20% move. That's a very good move. Again, a lot of people say like, oh, that's not an expansion at all. It's not, an explosion, blah, blah, blah. But guys, I mean, if we're really thinking about this, like if we're going off of market cap-wise, and I know that every XRP holder out there just winced a little bit, guys, we added over $16 billion in market cap to XRP in that 9-day period. That's a very strong move. Again, it also goes to show you like, hey, yeah, XRP has a lot of demand behind it. But regardless of that, where could we see XRP retest? If we're going to see, a rejection, and if we're going to see XRP kind of cool off, ultimately I would say like the midline, around like $142, $148. And again, it won't be like, extremely long down here. Basically, what we would see is another retest of like maybe 166 or 164. Then, we'd have a little bit of chop down here, and then we would get that continuation. It's just to kind of cool the markets down, reset sentiment a bit, and then get that next big push. But overall, the markets still look pretty good. We'll probably just have some volatility today, and I'm not really expecting a rate cut at all. Probably just see a rate pause. Very similar to what we saw back in January. Anyways, so with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord description below. And with that being said, guys, this is Nick. Thanks for watching. Peace out, guys.